Here is how to buy land when a seller knows exactly how much it's worth. So, these are some of the hardest conversations because you're not dealing with an uninformed seller. You're dealing with someone who's anchored to market value or above it. So, the goal in these situations isn't to argue the price or talk someone into a deal. Your job is to do one of three things: find their real floor, to reframe how the buyers actually look at the property, and then change the structure of the actual deal. So the first thing I would do is anchor to the market, not to my offer. This is an AJ Sharma trick. Say something like, "Hey, in this area, I've seen a lot of land investors offering $60 to $70,000 for properties like this. If someone offered you like 60 or 70, what would you say to one of those land investors?" Now you're not debating them, you're letting them react and blaming it on someone else. Once they respond, I reflect it back. Hey, so just to be clear, you wouldn't take a dollar less than $100,000? Pause. Okay. And just to be clear, 95,000 is still too low. Repeating what they say and anchoring them lower, those two things forces them to commit to a number, and often it'll pull the price down a little bit without any extra pressure. One of my favorite follow-ups, and we use this with Maya, is what's an offer that would just be way too low that you'd reject offhand? That answer almost always tells you somewhere near their real floor. Next, I kind of walk them through the property, but don't attack it, but talk about the property. Say things like, "Hey, I can see why your price makes sense there at a glance." But then I would introduce some buyer reality. Okay, looking at your property, buyers are usually going to factor in the slope here. Access like this limits what people can actually do, that type of thing. I'm not saying the property is bad. I'm saying that buyers usually discount for this type of thing. So sometimes that works. Sometimes the seller's just not wrong. So there might be some sort of value add. Maybe you can subdivide it. Maybe there's some zoning upside, some type kind of entitlement angle. If there's real value add, then paying closer to market can make sense. That's more underwriting, not negotiation. When prices won't move, then change the structure. So lay it out like this. The cash price would be a lower offer and a fast close. Owner financing, full price, give them what they want, but pay over time and get favorable terms, or hybrid, like a small down payment and then monthly payments. So then you're not fighting over numbers, you're talking about flexibility. And if they're still stuck on top dollar, then you can try to double close. If you want that price, let me market it for 6 months and see if I can sell it above that number. I'll keep the upside, but we can get you your number and try for it. Time is often cheaper than capital. So an example, let's say someone wants and they won't take a dollar less than 100 grand. Okay, well, I can give you $2,000 a month for 50 months, and I can give you $102,000, 51 months. You can give them a little bit extra, but get exceptionally favorable terms. You'd be surprised how often that works. People think about the big number and they don't care that it's over 50 months. And I've seen that work amazing a lot of times. So I think the key understanding here is you're not trying to win the negotiation. You're trying to surface the real floor, what they'll take for it, reframe how they're thinking about it and realizing that what buyers are thinking, and then expanding the deal beyond just that one number and restructuring it.